And the idea behind this is that it tells you which direction in the short-term momentum you should be trading. It is used in its rawest form to stay in the market in both directions. You just continually are long or short of an asset. Now, when I put the indicator on the chart, you will see it puts dots there. And the way it works is if it's underneath an asset, you should be long of the particular asset you're involved in. And the dots represent basically a breakdown below there changes the trend. It's a complete reversal. So a lot of times traders will put their stop loss underneath that. Now, as you can see, there is going to be a certain amount of trouble with this because it tends to get you in and out of markets way too quick. So one of the filters that people will use quite often are moving averages. So this moving average is going higher. It's a 50-period moving average. Doesn't really matter what you use, just whatever you're comfortable with, I guess. And you can see that the SAR is showing a buy signal all the way up to here. Now, you would have gotten in before, or when you crossed the line, depending on how you entered. And then eventually you get the SAR giving you the opposite signal. Well, at that point in time, you can exit the trade, or you can move stop losses up right along with the SAR. It really comes down to whether you're shorter or a longer term trader. Now you can see we did chomp around a little bit here, but if you are only following the long signals, it did work out. We did dip a little bit here. You could make an argument for a sell there. That might have been a loss, but then we turned right back around, got a buy signal with the upward momentum, and now we continue to go lower and lower and lower right along with the moving average. Now, the idea is that it gives you a place to put your stop loss, for starters, which is always important, and it gives you the idea of going back and forth. But I believe, and many traders believe this as well, that you shouldn't fight the trend anyways. So just use this as confirmation of the moving average. SAR is a common indicator. You can find it on most platforms, certainly on MetaTrader 4, and the moving average, of course, as well. So combining the two, you get the momentum of the market, and then obviously you get several attempts to make money on the way down or up, depending on the asset. Now, when I switch to the daily, and now it's a 50-day moving average, you can see that it moves right along. Same principle. In 15 minutes, it works the same as well, and so on. So really nice trading system, pretty straightforward. You just put your stops on the other line, or on the other side of the dots. When the dots reverse, you jump out. If you do it the pure way, you just turn around and reverse the trade. But that, of course, is a little bit riskier. Rallied a bit during the day on Thursday, and when I look at this chart, I notice that there is a significant consolidation area, and I think we're getting a little bit of bullish pressure. It's going to take a while to go higher, but certainly I think there is plenty of support longer term that I think the buyers will return to this market. The British pound found a little bit of support during the day on the 1.2850 level is going to offer a short-term bounce. The 130 level above should be massively resistant. Now, I think that eventually the sellers will come back in, and then we drop from there. The dollar rallied a bit against during the Swiss franc, and it looks likely that the 0.9750 and 0.90 level above is massively resistant. Now, if we can break above the 0.98 level, then the market can go much higher. In the meantime, I think we're going to have to attempt to build up momentum, so we may get a lot of back and forth, but it does look like we are starting to get a bit of upward proclivity. Thanks for watching. We'll see you again on Monday.